We're just going to give just another minute here to let everyone log on very briefly here. We'll start the webinar in approximately 1 minute. Just want to give everyone a few more seconds to get on. Hang tight. All right, let's go ahead and get started here. My name is Josh Elohim. I'll be your presenter for today. Our company is BackNine Insurance. We are a boutique general agency focusing on life insurance, long-term care, annuities, and disability income. Today's webinar is going to be based on guaranteed issue for small to mid-sized business owners. We have had a lot of success in this space, so hopefully you have some clients that are business owners or you're looking to get into the business owner space, one or the other. Let's go ahead and get started here. A little quick disclosure. All right. Go ahead and kick off your shoes and let's have some quick fun here. So what is COLI? For those who may know or do not know, COLI is corporate-owned life insurance. Just to give you a quick little history of it, COLI was used in the 1950s for tax arbitrage. It was used in the 1980s for tax shelters, and then up to the 1990s for tax deferral. And what we've noticed is that this was reserved in the past for Fortune 500 companies. And what we realized is that there's only 500 Fortune 500 companies. So they kind of ran out of people to work with in this space. So, you know, from 2010 to present, what they've done is they've opened this up to small to mid-sized businesses now, and that's allowed us to have more of an impact for those, you know, those companies from, you know, 10 to 100 employees. What we're seeing this used now for is retirement income, for balance sheet leveraging, and we're going to go over some scenarios coming up here shortly. These plans are, you know, they're predictable, they're flexible, they're versatile. And the ownership can be designed as it could be owned by the company, or it could be company sponsored and individually owned. So there's a lot of flexibility when it comes to these plans here. Just some things we've seen here. These plans are used to attract, reward, and retain your current and future employees. You'll see a little circle over there on the right side there that gives you kind of a visual here. So protection it's used for with companies. Continuity, retirement income, which we're going to go over. Some of the needs that we're going to address here with this guaranteed issue, obviously you have a death benefit, you have a retirement need, disability, long-term care. We've seen vesting schedules here, so there's a lot of needs that you can be used this for. Some of the product offering that we're looking at here is term, which you're probably familiar with. And then we have guaranteed UL, which is kind of like term for life. We can use current assumption. We can use IUL, S&P 500 caps and floors, and we can also use VUL as well. So there's a lot of flexibility with what products we're going to use here. Some of the plan designs we've seen some success with is key man insurance, pretty straightforward, buy-sell agreements, split dollar we've seen some success with. So split dollars is basically you can have the company pay half the premium, the employee pay half the premium, and then the beneficiaries can split that up as well. So non-qualified deferred comp plans, looking for any kind of write-offs. We can also go over these in depth if you'd like after the conversation. Supplemental executive retirement plans or SERPs, executive bonus plans, and then you have REBAs, restricted executive bonus arrangements. So there's definitely multiple ways that you can set this up here for different things, and the whole goal here is just to figure out what your client's needs are, and then we can address that. Underwriting. So when you hear guaranteed issue, there's always a kind of a question mark here. Well, how does underwriting work here? Well, normally when you hear guaranteed issue, you think about, you know, group term policies where they have like a built-in table 4 to table 8 rating. and normally there's very low face amounts as well. So in order to get guaranteed issue here, you have to have a minimum of 10 lives to get guaranteed issue. You can do simplified issue with 3 or more lives, so you're going to have simplified issue. There's still no blood, no urine, no exam, but they are going to do medication checks. They're going to do motor vehicle report checks. So there's a few things they're going to do there. You can do this with 1 life. So you can go through full underwriting here with 1 person. So, and you'll see with some of the concepts we're going to go over here that it can make sense for a business owner to take advantage of this here. So let's go into the actual guaranteed issue questions. What do they ask you? So in essence, there's really 4 questions they ask with really only 1 medical question. Let's just go through these here. Are you actively at work for 30 hours per week or more? They ask a U.S. citizen question. They do ask a smoker, non-smoker question. And then here's really the only medical question. Have you been hospitalized for 4 or more days in the last 90 days? So that's, you can get people who've had some major health issues coverage if they qualify for all the other parameters, the 10 lives. One more thing to throw at you there. There's also a ruling called 101J you have to qualify for. So we'll go over that, but you have to make a minimum of $100,000 a year to partake in this plan. And that ruling is called 101J. So they're looking for really executives and above. So some of the guidelines we already talked about a minimum of 10 lives, $100,000 of income. Death benefit, they use a multiplier here. So how this works here is that there's a $50,000 multiplier, and you can get up to $5 million of death benefit for each person. And then there's a minimum of $100,000 death benefit. Ages 18 to 70. There are some carriers that do offer guaranteed issue, preferred rates. So I've been doing this for a while now, and I've never seen this done before where you can, it's hard enough to get a preferred on an individual going through full underwriting. Imagine that you have the ability now to get a guaranteed issue product for a group of people, and you can get it at a preferred offer. It's very powerful. And these are done at unisex rates. So here's the permanent side. Now we do have some term options as well, different from your unum plans you're probably used to or your group plans. We can do, guaranteed issue for term insurance. You have to have a minimum of 25 lives. They're looking for you to make a minimum of $50,000 as opposed to $100,000 with the permanent. There's also a death benefit multiplier that they use. There's a few different carriers that have products here, so it could range from $40,000 to $50,000. The max death benefits is $3 million. I have seen some cases get approval for up to $5 million based on the client, the situation, and with a minimum of $50,000. Ages are pretty similar, 20 to 70. They do use unisex rates, and then the term insurance is offered as standard health class, which is still pretty competitive for really no underwriting. And just so you know, the health question is very similar. They only ask really 1 question for the term, and that is, have you been hospitalized for 4 or more days in the last 90 days? Some of the sweet spots that we've seen some success here with, any business that's profitable is obviously going to be a potential candidate, but some of the things we've had success with law firms, with CPA firms, manufacturing companies, engineering, so you can kind of see their construction companies and tech companies. White collar, doctor groups, anyone that's making money is a really good candidate here for having some success with these guaranteed issue products. So retirement income is, I'd say, really important to some of these executives and some of these business owners. If you've listened to some of my other webinars, I do one on tax-free retirement, and we talk about this bucket sheet here. So I just want to give you a quick overview. When it comes to your money, there's really 3 buckets where your client's money is going to be at right now. Your tax-deferred bucket, your 401ks, your taxable bucket, stocks, bonds, mutual funds, and then your tax-advantage bucket, so muni bonds and Roth IRAs. So we firmly believe in all these 3 buckets here. Your clients should have some money in these 3 buckets here. But the challenge that we've noticed is that you're going to be taxed on these buckets here. Well, what happens? How does it work? Because we all know it's not how much money you make, It's how much you get to keep. Let's take a quick peek here. 59.5, you have ordinary income tax plus 10% penalty. You also have your tax-deferred bucket becomes taxable. At age 62, you have too much modified adjustable gross income. 85% of your Social Security benefit is taxed. At age 65, you have Medicare Part B cost increase from $105 to $336 a month. And then at age 70.5, your RMDs add to your tax exposure. So that's another challenge that we're seeing here, required minimum distributions. So I tell the client, what if there's a way if I could show you how to get non-reportable tax-free income? Is that something you'd be interested in? Well, I say, well, there's one more bucket you might not be familiar with, and it's called life insurance. Well, I thought life insurance was just for a death benefit. No, that's called term insurance. So I'm not going to go through everything here, but you can see some of the advantages of putting money into life insurance. I always tell people we don't ever recommend putting all of your money into life insurance, but you put a percentage of what you have in, and what it does is it protects all the rest of their investments, because it's no better vehicle that you can take money out than when it comes to life insurance. So tax-deferred growth, tax advantage distributions, and then, of course, your tax-free death benefit. So it's definitely a great setup that we're seeing here that we're using here on a guaranteed issue basis. It makes life even easier. I want to go through a quick case study with you guys. We'll label this retirement income play. This is actually a real case that happened. We had a law firm. There was 25 junior and senior level partners, about 100 employees altogether. So I guess one of the biggest differentiators here is that with group term insurance, you can't discriminate. So normally if you get $100,000 for one person, you have to get that for every person. Well, here, this is called an executive carve-out, because what we did was we handpicked 25 of the junior and senior level partners to go onto this plan here. Some of the employees had some underwriting complications when they were trying to purchase life insurance in the past, so this is an option to look at. The firm was looking for future cash buyouts for the partners, hence vesting schedules, or set them up on golden handcuffs, stay with us for 10 years, and have a way to be able to use some of the cash in this plan to actually buy out the partners. So I'm a visual person, so I like to give visuals here. So let's take a quick peek here and see what this actually looked like. So here's the actual illustration. You'll see you got 25 partners there, ranging from age 61 all the way down to 33. We end up putting $1.5 million of permanent cash value life insurance on the main guy, and then down to about $300,000 of death benefit. So again, hence the range. We used a one-time salary here for a multiplier to see how much benefit we were going to get for each person. Now, it could have been everyone gets the same amount, which is another case study we'll go over here. But in this situation, this is where it made sense. This is actually owned by the company, paid for by the company, hence the golden handcuffs and the vesting schedules that were set up here. So you'll see here, it's about $196,000 going in on a 15-pay basis, which brought about roughly just shy of $13 million of death benefit for all the policies. You'll see the cash growing in the policy here. And then we end up using an index strategy here. So index, familiar with caps and floors based on the S&P 500. Your client participates in the upside but not the downside because you have the 0% floor to protect you. So this was a real case that happened. It ended up being a $268,000 target case. This carrier does offer rolling targets. If you're not familiar, you can always give me a call or send me an email and ask me questions about that. But we end up putting almost $250,000 into the agent's pocket. I'm not sure about you, but that would definitely change my life. So that is the retirement income play that we're having success with. Again, this is a good-sized case. I'm not saying these come along every day, but all you have to do is close 1 or 2 for the year, and everyone's very happy. It could be a $100,000 premium. It could be $50,000. So I don't want to scare you away with a bigger case because it could be $1 million premium. So it's really going to be up to you what clients you have access to. So that's the case study number 1 I wanted to go over with you. So this is going to be more of a balance sheet play scenario, and you'll see why here in a second. We had a mid-sized construction company doing very well financially. One of their challenges was they had to keep assets on the balance sheet. See, in the past here, when a lot of these companies that you're working with know they need life insurance, but when you go to the CFO and have a conversation about, putting in $100,000 and then having $50,000 or $60,000 of cash surrender value year one, sometimes you get the door slammed in your face. Well, this setup here is what really will give the CFO, make him feel warm and fuzzy inside now. So we have 15 key employees here. Again, it was about 100 total employees in the company. I talked about the CFO concerns about the balance sheet. So what we did was we're going to show an overfunded 7-pay setup here for the 15 employees. And the big ticker here is that the cash value in year one is greater than what the premiums were paid in year one, hence the balance sheet play. So just to give you a little story here, a couple years, about 20 years back, I'll give the carrier credit. Nationwide created what's called a COLI enhancement. And what that does is that it allows that cash value to be positive in year one here. So let's go ahead and go over the actual illustration to give you a visual here. So here's the illustration. Like we talked about, you have 15 partners here in the company, ranging from age 62 down to 40. This was really geared towards buying the partners out. So we have a set death benefit for each person, $443,000 roughly for each person, equal. And then to give you a visual here, here's the actual illustration. So these are going to always be 7 pays, and they're going to be overfunded. So we're here to take a little look here. So the company put out $410,000, okay, for a 7-pay to overfund it. If we take a look here to the right, everything looks normal. Okay, the cash accumulation value is $336. That seems around right. But wait a minute, if we look over here, one more slide here, $415,000 of cash surrender value. That's where people scratch their heads. Wait a minute, well, I put in 410 and I have 415 of cash value. That has the COLI enhancement built into the product there. So this is where now this company needed that money for bonding requirements to have that cash on the books. So what we did some research on our side and found out that, hey, this product here, it will cover the requirements for the balance sheet for the skyscrapers these guys are building. So it covers that, and so we're not asking them to part ways with their money. All we're asking them to do is move money from one bucket to another. So this worked for them very well. You got about $6.6 million of death benefit here, and then if you take a look here, we had distributions coming out of this policy right after the 7th year. So just to give you a quick heads up, when you have these higher the cash value riders, you might know what's coming next. The carrier has to wait to protect themselves, because the only risk that really is coming here is not to your client, because they can surrender this policy and be positive. The risk comes to you and I. So what they do on these policies is that they lower the compensation. So it's actually 24 points goes to the agent. The positive side, though, is you get paid on the 7-pay premium. So that'd be $410,000 here. So it's still a great case. What they also do is they put a 4-year chargeback, reducing chargeback here to cover the carrier as well. So 100%, 75, and it goes down from there. So still, some of these business owners do not like taking hits in their balance sheet. So this could be a really good potential opportunity here to talk about a case like this with some of your clients. And now you can also see why this is not just for a group. You can do this for 3 people. You could do it for 1 person. And it still makes a lot of sense. So please, I'd love a chance to, if anyone has any questions, everyone's muted right now, but go ahead and give me a call after, or you can send me an email. I'd love to answer any questions or run some quotes here. So let's go to one more case study here on a term insurance scenario. So we had a group of doctors, 63, and the group had there was no coverage for revenue loss in the event of death. So what we did was we set up a key man policy for just $1 million for each doctor. Now imagine trying to get 63 people to go through full underwriting. There's no way in the world it's going to possibly happen. What we did here is to give some control for the group. The owner and the beneficiary were the employer. But what happens with these policies is that each policy, if that person decides to leave, the policies are portable and they're also convertible. So it's a term scenario. Each policy is owned individually, but it's paid for by the company, and then that policy is there. So God forbid their insurability changes at some point, then they can convert that policy to permanent coverage, and they don't have to worry about not having the coverage for whatever it might be, for estate planning purposes or whatever it might be, wealth transfer. So that's the terms situation. It is pretty straightforward here. So what do we do to get started here? How do we get the ball rolling here? So all we really need from you to get to give you guys some quotes, or gals, is a census. And what comes with that? The main things we need is a name, client name, a date of birth. We need an annual income, and we need a job title. It's really straightforward. Normal, if you work in the property casualty space or the employee benefit space, you have these, right at your fingertips here. And then again, you don't have to put everyone onto the plan. You can discriminate here. So let's say you have 100 employees in the company, but you really want to look at 10 people or 15 people. That's where these policies are going to shine. And the way they protect that is by having that annual income minimum of $100,000. So I love to talk about concepts and ideas and talk about actual cases, but what I really get excited about is giving you marketing material that you can use to go out there and get business. That's where I really feel like maybe as a GA we fall short as an industry. So let's give you some visuals here of things that have been working for us. Okay, so I go into a meeting with my clients I have now, or some new potential clients. What are some of the questions that I can ask them to see if they're a potential candidate? So if we take a look at this marketing piece, we've had a lot of success here. So I'm not going to go through every single question here, but some of the basics, what kind of tax entity is the firm? Is there a potential buyout plan in place for the partners, members, owners? It's scary thing is that some of the most successful companies, they're great at what they do, but when you talk about these, you ask these questions to them, they all look around saying, we have nothing. We're just good at doing what we do. So it's okay to go out there and dig a little bit and find out. If there was a buyout plan in place, what would happen if, if someone passed away or someone became disabled? What would be the situation? So just some basic things that you can look at here, questions you can go over with the client for, potential for your current and future clients. If you look to the top right here, we like to brand stuff here. Our goal is not to market ourselves. We work for you. So we want to brand you, we want to market you, get your name out there, and put you in front of the client and make you look really good. So if you do happen to have a logo, all you have to do is shoot me a quick email, give me a call, and we'll go ahead and brand this with your pertinent information on there, okay? So this is a piece we're having success with. That is the questionnaire. One more piece that I absolutely love. Okay, so one of the things that you'll have access to by working with BackNine is we have a carrier that offers what's called a complimentary business valuation. So just to give you a quick background here, a lot of the time, you go into a meeting and you ask for business, and it's a tough gig at just asking for things. Well, what about if you can go into a meeting and now you can give something away right away from the beginning? So you can go offer all your clients, your current and future clients, a complimentary business valuation. Now, this makes you look like a knight in shining armor because, first of all, you're coming in and you're offering something right off the bat that they can get for, I hate to say the word free, there's no value in free, but complimentary. This gives you all 5 values to method the business. So it's not just like we're going to give you one. It's a really interesting piece that you can go out there and talk to your clients about to show them where they're at. So, for example, let's say that your business that you're working with, they have a key man policy for $5 million. So you go ahead and you do the business valuation. It comes back that they're actually worth $7 million, not $5 million. Guess what? New key man policies, new buy-sell agreement has to be put in place, and you have a new sale. So there's a scary stat here that 40% of the time, some type of insurance is sold after this valuation happens. And believe it or not, this always shocks me, but I talk about this with agents. They absolutely love it, and then they stop right there. This marketing piece is right here. We can brand it with your logo, your pertinent information, and I just hope that you start using it. It takes about 7 to 10 business days to get the valuation back. If you take a look here, you'll see some of the methods, some of the reasons that you would do this. You know, retirement income, exit planning, business protection, wealth transfer. This is all the client has to fill out is a section right here. It's very simple. I could brand your name right here, all your information. We need 3 years of tax returns or 3 years of business financials. Really straightforward to give them an opportunity to go through their book. Now, who has a better view of their business after doing evaluation? You guys can see everything here. So it really makes you look really good in front of your current and future clients. So I strongly recommend taking advantage of this business valuation, getting it branded with your information, and we'll start bringing in some cases here. So we have that. So and just to go through so we went over the business insurance questionnaire, and then we went over the business evaluation. And then I have a tax-free retirement piece. I did this in my webinar before, the buckets that we went over. So that's a piece that I can also have branded with your information on there. Just give me a call. Hopefully I have some repeats on this call here right now that have seen the tax-free retirement. I have a marketing piece that shows the 3 buckets we went over and what taxes have increased to right now. I can also brand that with your information as well. So please give me a call and ask me about that. So before I go into the producer's place here, I want to give you one. I'm all about visuals here. This is actually a visual. This was the case that we closed for the law firm, and you'll look here. You'll see 25. There's 25 policies right there on the desk there. So these cases do happen. They're real, and my expression I use is that someone's going to be blessed. It might as well be you. These cases are out there. Take advantage of it here. So there's a quick little visual as to what it looks like when you close a $268,000 TARA case. Everyone's very happy. So when you do close a case like this, you have 25, however many policies there are. It's hard to keep track of all that business. How do I keep track of it? How do I service it? Well, we designed something that's called the producer's place. And what this is, it's a system that gives you the ability to track all of your cases live in one universal place. See, without a system like this, what do? Well, let's say you work with 5 carriers. You can log into each individual carrier, and you can set up a username and password, and you can see what's going on with your case. Well, it's a challenge to do that, and it's very frustrating. So we created the producer's place. It gives you live case status update on all of your cases. If you write one of these guaranteed issue cases, there's a chance you're going to have a lot of policies on the books. So it keeps you extremely organized. It tracks all of your pending and all of your in-force business as well for policy reviews. It's mind-blowing when it comes to being able to track and organize your business. You can view all of your commissions in the portal. So did I get paid in this case? Did I not get paid on this case? We get this call all day long. And here's a simple place you can go to. You can log on. You can see all of your business. Let's say you're contracted with 15 carriers. You can see your appointments all right here in the portal. This is going to be this hopefully will blow your minds here. We actually have in-force data feeds coming from 6 carriers right now. What does that mean? Well, let's just say that you have a beneficiary change on your policy. Well, not only can you track it on the carrier website, but you can come here now and you can log in and you can see any changes that happens to beneficiaries. But better yet, let's just say we want to know what's in-force, what is my cash value of my policy right now so I can do a review with my client. Well, as soon as the cash value changes in the carrier website, it changes right here in the portal. Never been done before in the history of this business. We're very excited about this. And again, you can access all your documents. You want to look at the application that was done. You want to look at APSs. You want to look at you can look at all the information right here in the portal. What we've done over the last 5 years it took to build this is we heard the cries of the people. We know that there's a lot of frustrations. A lot of our agents are in the dark. They don't know what's going on with their cases. So That's why we built this portal here, to make your life easier. And just so you know, our slogan is to simplify the selling of insurance. And in my opinion, we haven't scratched the surface of what's going to happen and what's to come in this portal here. So, well, all my contact information is here. I really thank you for taking the time to listen in today. My phone number is here. Please give me a call if you have any questions. I love the case. I got a client that this might be a good fit for. I have a business. Let's talk about it. Here's my phone number, my email address, and again, I greatly appreciate you taking the time to listen to me. Thank you so much for your time, and have a blessed day.